Hi friends, Hardeep Singh Nijjar's death has put close to $100 billion of economic ties between India and Canada in jeopardy. Many people sent me messages asking Rahul what is likely to be the impact of India versus Canada issues that are going on right now on Indian stock market. So in this video, together we are going to explore the nuances of any impacts from Indian-Canada political issues that are going on right now. I will present to you data and facts in a very simple and meaningful language so that you can understand any impacts that are likely to be there from this fallout of India versus Canada. With that, let's get this video started. So the first thing we need to understand is that how much of money Canada has invested in Indian stock market or Indian broader market, which will give us the perspective or the quantum of how much money we are really talking about here. So for that, let me take you to CDSL's website that you see. It's the data that is available on public domain and it gets refreshed on a monthly basis. So if we look at July 2023, you will see this chart coming up, and very simply you will see that all the countries are listed on this chart in terms of the portfolio that they hold or the asset under custody AUC they hold within India. So at number 1 is USA, followed by Singapore, Mauritius, Luxembourg, and so on. Canada, as you see, is at number 7, and as of July 2023, the total AUC, which is assets under custody, is 1,72,000 crores. This is the live data that you're seeing. I am not reading any news here. I am actually showing you the data that is out there as live data, right? Now, if you look at this, Canada is at the 7th place. United States is the number 1. So maximum money that we get from a foreign perspective is from United States. And you see the quantum here. This data is huge as compared to what we have from Canada. So from that perspective, the impact is very less as compared to if US FPIs start to pull the money out of Indian market. Point number 1. Point number 2 is, even from this perspective, if you look at the data, you will see the majority of their investment is in equity, followed by some little exposure in debt, and then hybrid, right? So I think in the bigger scheme of things, you can completely discard this debt funding here because it is only in few thousands of crores that is not going to impact Indian stock market at all, right? But if we focus on equity here, they have invested or they have assets under custody roughly 1,45,000 crores. And let me now talk about this money here in terms of, let us say all of a sudden, if Canadian FPIs or FIIs start to pull this money back from Indian market, then where is the maximum impact that we are likely to see? But before I do that, let me also tell you that this money that Canadian FPIs have invested in India, they have invested this to make money. They are not doing any charity here. They have seen that Indian market is a growing market from equity perspective and everybody wants to get their money invested in a growing market. So it is not a charity they are doing. And also, secondly, this money is not directly under the Canadian government's control. Yes, there are few pension funds that I will talk about which might have some influence from political parties and politics, but it's not that the entire money is controlled by political parties. There are businesses out there who have invested this money in Indian market to gain profits. They are not doing any charity. That is the point number 2 that I want to make. But let us also understand which are the stocks, which are the equities that are going to get impacted even if we assume that the worst happens and Canadian funds start to pull this money out of Indian market. What you see on my screen is, as per a recent article from ET, there are 3 main pension funds from Canada that have taken large exposure into Indian equities. So the first one is CPP, Canadian Pension Fund. Number 2 is CDPQ, another pension fund. And number 3 is Ontario's Teachers Pension Plan. Now, if we just break it down simply and look at CPP first, which are the stocks that CPP right now has investments into? Let me quickly give you a walkthrough of that. So number 1 is Delivery Limited. If you look at Delivery's investment shareholding patterns, you will see that Canada Pension Plan has close to 6% shareholding as of June 2023. Now, this is not very significant. It is not 48%, 40% or 30% or 25% stakes. It is merely 6%. And yes, in the short term, the stock prices might fall down because there is a fear. And also, it doesn't happen all of a sudden that the Canadian Pension Fund will start to pull this money back. As I said, that there are reasons that they've invested here, but maybe politically it may happen that they are directed to pull this money out of the Indian companies, and in that case, yes, shortly there may be a fall in the stock, but it is not going to be a meaningful impact, because the moment the share prices drop, there may be other investors in the market who are willing to take the bet on this particular stock. So all in all, I don't think there is a meaningful impact here from this company's perspective. And if you look at the second company here, which is Kotak Mahindra Banks Limited, if you go to the investor shareholding pattern here, Canada Pension Plan again has 2.68% again as of June 2023. And actually, if you look at the data, it has been reducing drastically anyways. This is not very meaningful from a shareholding perspective. The third company that we know is Zomato. So from a Zomato's perspective, if you look at the shareholding pattern, Canada Pension Plan has got again 2.37%. Short term, there might be some fall because of this news and the fear in the market, and people might want to book their profits while they hold Zomato. Again, you can't predict it, and there is not going to be a meaningful impact here on this particular company as well. Also, the fourth company is Indus Towers Limited. If you look at again the shareholding patterns here, you will see that Canada Pension Plan has got close to 2.18% of exposure here. All in all, these four companies that I presented to you does not show me meaningful exposure by Canadian pension funds. Therefore, we shouldn't worry about from that perspective. Also, recently there was a news around CPP, which is Canadian Pension Plan, invested or acted as an anchor investor in one of the companies, Indospace, and they invested close to 205 million US dollars. There is some news around it, and of course, this company is not a listed company, so from a retail investor's perspective, it does not really bother us. So all in all, if I come back to the ET article here and talk about CPP as being the first pension fund, what we have established is that there is not going to be any major impact on direct equities as a result of this fund pulling out from Indian markets. And we don't even know whether they will pull out or not, because the tension between Canada and India have not gone to a level where the economic ties start to have direct impact on the Indian stock market. Point number 2 is CDPQ, another big pension fund. So let me quickly walk you through. From CDPQ perspective, only one company that I could find from my research, I don't know if there are any more, is Piramal Enterprises Limited. And if you look at the investor shareholding pattern here, the first fund here you see there, I can't even read it, I don't know which language this is in, but this is the CDPQ fund, and they have 2.93% of exposure right now. But you will notice that all of these 4 or 5 companies I have presented you so far, they have been gradually decreasing their shareholding pattern from March onwards. So maybe there is some tension already ongoing between Canada and India behind the scene, and they have been pulling out. I can't be sure on that, but there is definitely some pattern here where these funds have reduced their exposures. But from this fund perspective, this is the only company I could find out. There is no other company that I could find out. And if I move back to the ET article, the third pension fund, which is the biggest one, is Ontario's Teachers Pension Plan. And this fund, I actually could not find any Indian direct equities or stocks where they have the exposure. All in all, if I were to summarize, all I would say is that if you're a long-term investor in any of these stocks, then you don't need to worry about it, because there is not going to be any material impact on the stock prices in the short run as well as in the long term. For people who might want to take fresh entry into any of the stocks that we have talked about, you might want to be conservative here and do not invest right now. Wait for the stock to get corrected. Maybe that presents you some opportunity to buy. So all in all, from a direct equity perspective, these 3 major pension funds do not have any material impact on Indian stock market. Also, you will notice that any of these companies are not big companies that are part of Nifty or Sensex that might bring the overall index or market down from Indian market perspective. Second indirect impact that we need to talk about is there are a lot of Indian companies that are having operations in Canada. There are a lot of Canadian companies that have operations in India. For example, if you see the data here, nearly 600 Canadian companies, including the big ones, they operate in India. Likewise, more than 100 plus Indian companies such as TCS, Infosys, Wipro, they are doing business in Canada. So there may be some indirect impact on these companies' performances or the operations, and that might lead to the stock prices falling down. But let me also put this in context. If you look at this website here, which is investindia.gov.in, what you clearly see is that there are big companies from India that are operating in Canada, and there are companies from Canada that are operating in India. And if I just take an example of TCS, so let us talk about TCS. So from TCS perspective, if we look at the data, you will see that 6,000 crores worth rupees of revenues are coming from Canadian geography from TCS perspective. How much is the total revenue of TCS? Close to 60,000 crores. So if I do a simple math, it is only 10% of their revenues coming from Canadian geography. So it is not that all of a sudden all these clients that have given $1 million, million year, multi-year projects to TCS, they are all going to stop immediately. Nothing of that sort happened. So there is definitely an exposure from Indian perspective and Canadian perspective, and both countries have their stakes on the ground. So, and it is not that straightforward that these companies will stop their operations altogether. That only happens if the conditions like war happens, which is far-fetched from where we are right now between Canadian and Indian political situation perspective. So again, indirectly, I do not see any big impacts coming from these companies' perspective as well. So by looking all these factors, I can very simply conclude that there is not going to be any material impact because of India and Canada tensions going on right now on Indian stock market. In fact, you should just chill and relax. Continue doing your research on Indian stock market, because I can promise you that Indian stock market is a growing stock market and there are a lot of opportunities in Indian stock market. More than 4,500 listed stocks is what we have right now. And there is a reason that FIIs from all over the world are coming and investing in India, because Indian growth story right now is there all over the world and people are willing to put money into Indian market because there is a profit out here, right? So we shouldn't be worrying about all these. And also let me tell you that Indian domestic market, our mutual fund industry, retail investors like you and me who are doing a lot of SIPs, etc., is also reducing dependency on the foreign investors as the months and years go by. Hopefully there will be days when we are not dependent on any foreign investors for us to control our Indian markets. Let me know in the comments, what do you make out of Indian and Canada situation right now? What is the impact you see from your perspective on the Indian stock market or on the Indian politics or the relations between India and Canada? I would love to read your comments. And if you like this video, hit the like button, subscribe to my channel. Secondly, you can also consider joining my YouTube member community if you want to learn how to do in-depth analysis on stocks and mutual funds and other assets, because I put out a lot of exclusive content only for my YouTube member community. I will hope to see you in my next video. Until then, keep rocking.